Hello, my vetted VA friends. It is Hammer coming to you this week with your market update, your weekly rate forecast, and your rate recap. So this week, I am joined with today's guest, Chasity Graff. Chasity, please take a moment and just tell everybody a brief bit about yourself, maybe starting from second grade forward. Keep it under 45 minutes, but go ahead and tell everybody about yourself.
Okay, hey guys, I am a proud member of Vetted VA. I'm a VVA4, working towards that 5. I represent the state of Louisiana as far as loan originators go, and I've been in the industry for 17 or 18 years now. I'm losing track because I'm getting old, or I'm seasoned. That's what I'd like to say. I'm seasoned, not old.
Yeah.
And VA loans have been my favorite since I worked for the national lender and I was trained by underwriters. I went out and actually trained other lenders and brokers how to do VA loans. So they've been my favorite since 2004. And I think the saddest part about VA loans is that so many people don't know that they exist or don't understand their eligibility. And so many loan officers don't ask, did you serve in the military? So I know that's not about myself, but I love some VA loans. I have 2 kids, a doodle, a husband I've had. We've been together for 23 years. That's a bit about me. And I have this beautiful fake fireplace behind me. So
You do. You're rocking that holiday spirit, that Christmas spirit, holiday spirit. So awesome. Well, thanks for joining us today. For those of you that are here, if you are here live, let us know. We want to know that you're here. Go ahead and give us a comment. Make sure you share your name, because all I get to see is usually Facebook user. And I know that nobody called their kid Facebook user. There's a lot of odd names today, but I don't think anybody's named their kid Facebook user. So let us know who. Go ahead.
That because it would stand for something really bad,
Okay. I could run with that one. So if you're watching on the replay, do us a favor, give us a hashtag replay. Let us know that you were here. Either way, if you've got any questions or comments, we want to hear them. We're here to answer those for you. If you've got questions about rates, the markets, where rates come from, the rates that you're seeing, if you've got questions about, any of that stuff, or anything about buying a home or refinancing, that's what these calls are for. And we do monitor the posts all week. So if you're watching this and it's no longer Wednesday and it's maybe Friday or Saturday, you can still ask those questions and we'll make sure that we go ahead and answer those for you. So with that said, let's jump in and let's start with a quick rate recap. What I'm going to do, Chas, just kind of give everybody an overview of what happened in what I saw with rates last week. And then I'm going to ask you if that kind of goes along with what you've seen and anything you'd like to add to it. So
right now, so we can look at today. So that's perfect.
All right, so we'll let you pull out. So again, rates, actually, let me pop this up. It should be, it's along the bottom. It's all scrolling along the bottom, y'all. So rates improved a bit further since last week. You guys may see some headlines talking about how rates have gone down for the 4th week in a row. And oftentimes those headlines are a bit delayed, but this is actually true. We have seen rates improve quite a bit. Remember, it was November 10th, the big day that we saw rates go from the 7s as a generality into the 6s. We saw a very, very big move on November 10th. And the reason we saw that move was because of some inflation data, a specific report that monitors consumer inflation. It's called the CPI report. And that's coming up again next week. And we're going to talk about that. But that's when we saw rates really make a big move lower. And then they kind of stayed where they were in the mid 6s for a while, about maybe 6.5 to 6.75. And now they've worked their way down. In fact, we are seeing some VA loan rates that are actually below 6%. Now, if you don't have a rate that being offered to you below 6%, there's a lot of reasons that could be, including your credit score, or different things that go into coming up with the rate. But definitely, you guys know our mantra here is to shop around and make sure you are getting a fair rate and that you're happy with who you're working with. The improvement this week, by the way, was due to Fed Chairman Powell. He made some comments in a speech that he had on Wednesday. And I didn't expect that to really make any big ripples. But what he did, he said a lot of the same things he said in his press conference at the last Fed, but it was how he said it was different. And that's what kind of really sparked things to improve a little bit last week. So what he said was that the Fed was still looking to slow down how quickly they raise policy rates over the next few months. And we've talked about this before. The Fed is going to go ahead and raise rates the next few months. Mortgage rates react early to that news because they are already what we call pricing it in. Your mortgage rate's already including the expectations of where the overall rate market will be over the next few months. And Fed Chair Jerome Powell said, hey, we're still going to raise rates. We're going to do it at a slower pace, but instead of going higher than we thought, we are only going to go somewhat higher. And that combination word, or those two words, somewhat, made a huge difference in traders' minds. And they basically felt that, it was pretty firm. The Fed is probably going to stop hiking rates with a Fed funds rate of about 5%. And for perspective, everybody, it's 3.75 right now. So we are going to see more rate increases in the Fed funds rate, but we're unlikely to see those come into the mortgage market because, again, we've already seen mortgage rates go up in preparation of that. So that's kind of my take on it. And Chasity, now let me hear your take on it.
Yeah, I have steadily seen a decline over the past 3 weeks in interest rates. I mean, we were hitting in the over 7 for a little bit without some, a little bit of some decent discount points. Now, remember, everyone, discount points are just prepaid interest. That's really all that it is. And it goes to the lender to buy down your interest rate. We've been seeing a lot of seller contributions to do buy downs lately. But yes, I mean, I've seen VA rates in the high 5s this week with with not much in contribution. So it's pretty amazing how fast and how quickly rates can change. And I think what borrowers don't understand is that how our rates change literally every day. So, and sometimes multiple times a day. So it's really important that when they do get that pre-qualification, they make sure that they understand what rate they were pre-qualified at and that they're checking in with their loan officer frequently while they're shopping so that they can make sure that they're still in the rate realm they thought they were without asking for seller concessions or without it jeopardizing their approval. Don't always trust someone else to make sure that you're qualified every single day, even if it's the loan officer that you're working with, because we're working with multiple borrowers. So when we see a big rate shift, it is our job to go in and to recalculate everyone and make sure that they understand the rates have changed. That doesn't mean that every loan officer does it.
Very good. And that all great information. I want to go back specifically on one thing that you had said, and that was rates were, in the 7s. And that means that borrowers closed loans just a few weeks ago, a month ago, with interest rates in the 7s. Now, what should somebody that has a higher rate, what should they be looking and when should they be looking to do it? And the hint is on the screen.
Yes, we love and reduction loan. So VA is generous in the fact that they give us a streamlined refinance option. So it comes around after payment number 7, after 210 days, you have the option. Unfortunately, this also makes you a huge target for advertisements because this is all public record. The fact that you have a VA loan indicates there was some service there. The VA loan, it's public record, the date that it closed, the first date of the first payment. So the second that you are eligible for that refinance, you're going to start getting tons of junk mail. So that's a key indicator that you're eligible for that refinance, but don't open up any of that junk mail. Just call your loan originator that you had before or come to the beautiful vetted VA website that we have, click on your state, and anyone in your state can help you. Yeah. But streamlined refinances are cheaper. And on a refinance, we generally are rolling in the closing cost when we have the equity. So there's a lot of great opportunities there for buying the house and refinancing the rate later.
Yes. Now, if you did close on a loan just a few weeks ago and your interest rate is above 7%, you may be chomping at the bit because you want to get that rate lowered right now. And you're saying, hey, Helmer and Chasity said there were some rates that might be in the 5s. Maybe mine will be in the 5s. However, remember, when it comes to the IRRRL, you do need to have 6 payments under your belt. You need to wait 210 days. And that's going to be it's about 7 months. It's going to be a long 7 months, but the one thing I want to stress to you guys as we get into that rate forecast is the expectation is that rates will probably move a little bit lower from here in 7 months. Now, we don't have a crystal ball, and I can't tell you definitively what's going to happen, but the conditions for mortgage rates and where mortgage rates come from, we're more than likely to see the economy slow down. Inflation's going to slow down, and that's going to open the door for mortgage rates to improve. Chasity, does that sound right to you, or how do you feel about that?
Does. I mean, based on the predictions that the crystal balls that we do not have, but the rate predictions that we are making based on historical data and the people like you who, do this, literally monitor this by the minute and can make educated forecasts that yes, within the next 12 to 18 months that there's going to be a nice rate reduction. Now, I have been in this industry for 15 years, and whenever I started, rates were 7 to 9%. So this was a normal thing for me. And people buy homes at 7 to 9% all day long. We need homes, we need houses, and I've refinanced almost every single client I've probably ever had. But at the same time, we need to remember that it's that when you get that home, we may never see 2% rates again, like 2.875% rates again. Those were historically low rates. And at some point, we have to say there was a historic low, and use that, a lot of people were advertising historic lows, and we kept beating that down and kept beating that down. We're going to hit, I very well think we're going to hit the fours again. Do we see the threes, Hammer, do you think, in the next?
Only if we see a really, 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 really rough recession, and then we see the Fed have to do a 180-degree turn and go back to what they were doing during the pandemic and just flood money into the system. And
that's what the interest rates are paying for now. All the money into the system that wasn't actual earnings, and we have to make it back somewhere.
Exactly. So you talked about where, rates changing. That was the other thing that you talked about, is that rates change, during the day, from day to day. And I'm going to throw it up on the screen for everybody, just so you guys could see. We've shared these charts before. These are what are called mortgage-backed securities. Let me move some of this out of the way for you. So these are mortgage-backed securities, and this is just a funky, pretty little chart. And we don't have it red and green just for Christmas. It's always red and green. And green is generally good for mortgage rates. When you see these big green lines, they're good for your mortgage rates. Rates are going to improve a little bit. That's why you saw this really long line right here. That was November 10th. And that was when we saw mortgage rates take a big jump. Not a jump to improve, but mortgage bonds took a big jump. Mortgage rates took a big drop. So that's why we saw that very large movement here. And since then, we've seen, as these go up a little bit, and again, the higher this number, the better your mortgage rates are likely to improve. So this is the market that actually your mortgage rates are based on. And we've talked about it before. Mortgage rates come from two particular sources. It starts out with what's going on in the market, specifically with mortgage-backed securities and how they're trading. And then the second piece is the lender margin. How much does that lender have to charge on top of this in order to, make a profit and pay for their overhead? So that's why it's so important to shop around, and why we try to arm you with the information so you can shop around. One thing, if you are shopping, always use quotes at the same time. In other words, if we did a rate quote today and we compared it to one maybe from last Thursday, there's going to be quite a difference. And the markets have changed a lot since then. So it's always important to do a rate quote, rate shopping within a few hours of each other in that same window. Right, Chasity? Would you agree with that?
Absolutely. And there are other things, when you're comparing quotes to quotes, you need to pay attention to origination fees, underwriting fees, processing charges, discount points, and the interest rate, the things that the lender can control, because different lenders will use different insurance and tax rates to make their quote look better.
Yeah.
And in layman terms, most people don't understand that what they're looking at, is highly skewed by title quotes, which we're not in charge of, at the end of the day. So you just want to be looking at those origination charges, which are origination, underwriting, processing, admin, application, anything that's going to be in that Schedule A of an LE. Now, I personally, when I give quotes, I don't issue an LE. I use something called Mortgage Coach, and I send out an email with a breakdown that has the APR and all different types of options and all things like that. So, you don't actually need your credit pulled to get an estimate from a lender. If you have your details, your credit score, just go in and ask. Just and then compare the data, choose who you trust and want to work with, because it's more than just interest rate and numbers. It's who can actually get you closed, not just promises of, no cash to closing, but then it seems very out of line with everything else that you're seeing. Question that, you know? So, yeah, that's my advice.
Awesome. And all very good advice. One thing I'll just add on, as far as when you talk about knowing your credit score, that's a score that's been pulled by a mortgage company or a mortgage professional, not your Credit Karma score. Credit Karma scores are as accurate as Zillow, price, your house is worth, and bottom line, none of those are actually very accurate. So, but let's go ahead and jump into the rate. We're coming up on our time for today. So basically, where are rates going to go between now and next week and the next few weeks? So we talked about heading into 2023, the expectation is that mortgage rates will improve over time rather than continue to go up much higher from here, especially, unfortunately, as the economy goes into a recession, as people start to question their job stability. That slows down spending, and that's going to be one of the drivers of actually seeing rates improve. But over the next week, let's specifically drive into the next week, because we have a chance for fireworks next week, and it's before the new year. So when we see fireworks, it's not New Year fireworks. These are economic data and Fed data fireworks that we're going to see next week. So one thing to note is that rates are awfully good right now compared to where they've been the last couple of months. So if you like your rate and you're uncomfortable with the idea of taking on a lot of risk that rates could move, talk to your mortgage professional about locking in that interest rate. It's not a bad idea to lock in an interest rate, especially if you're closing sooner than later. However, for those of you that are a little more comfortable taking some gamble and that you have checked with your originator, like Chasity said before, as far as what you'll qualify for if rates were to move, that's important. If rates were to go up a 0.25% or even 0.5% from here, would you qualify for the homes you're looking for? And once you've kind of put those ducks in a row, we're going into next week and we're going to have two events. The first one is going to be on Tuesday, and that's going to be the next CPI inflation report. And that's that consumer inflation. That's the report that we got on November 10th that we had for the October reading. We're going to be getting the November reading. Now, when we get that report, it comes out first thing in the morning. The problem with that is it happens before mortgage rates are generally set for the day. So if that report goes against us, if we see inflation is actually picking up after having a month last month where it started to slow down, you're going to see mortgage rates that are going to get worse that day. And it could be as much as 0.25% generally. If we get a strong inflation report, you could wake up from Monday's interest rate to Tuesday's interest rate, and it could be 0.25% different. However, if that inflation report, like last month's, shows that inflation is decelerating, still too high, but getting better, then that's going to open the door for mortgage rates to improve a little bit further. Now, they're probably not going to do what we saw last month. We're not going to see rates go from right now in the, average would be in the low sixes down into the mid fives. We're not going to see a big move. It's not likely, but we could see rates improve maybe 0.25% in the good direction rather than 0.25% in the bad direction. Now, that's for Tuesday. On Wednesday, we're going to get the Fed meeting. The Fed meets approximately every 6 weeks, and they set the Fed policy rates, which is the Fed funds rate. We already know, and I'm going to share this up on the screen so you guys can see this. These are what are called Fed futures. This is the probability. This is what markets are betting on. Markets are betting that at this next meeting, December 14th, which is next Wednesday, a week from today, that the Fed is going to raise rates by another 0.5%. Right now, we're at 3.75. They're going to go to 4.25. There's about 0.25% out that believe, hey, the Fed needs to be a little more aggressive. They may raise rates another 0.75% like they've done the last 4 meetings. But most people, most economists are calculating that we're going to see a probability more of 4.25. Now, if this were to kind of surprise us, and they went higher, that would affect mortgage rates, but this is very unlikely. But what's going to happen at that meeting that's going to have a very big effect on where mortgage rates go over the next few weeks is they're going to forecast what they think is going to happen for the next couple of years. So each of the Fed members, each Fed official, they actually anonymously forecast where they think rates are going to be. And this is called a dot plot. So if I pull up, this is the actual dot plot. So right now, this was the one that was taken in September. And what happens is each of these little dots is a Fed official. And they say, hey, we think at this particular time, in 2022 and heading into 2023 and 2024, where they think the Fed funds rate is going to be and how high. So a lot of them felt that it was going to be just below 5% for 2023. And that's what a lot of markets are currently pricing in. By as we go through these other Fed meetings, as we go through the year, the expectation is that we're going to see the Fed top out their rate at 4.75 to 5%. And generally it's about 5% by the time we get to May. And the Fed is going to keep their Fed funds rate at that level for a few months while things continue to slow the economy down. And then the Fed is going to have to start to back off. And that's when the economy is going to be kind of going from overheated to too cold, and they're going to need to resuscitate it, and they're going to start to lower those rates. So when that happens, that's why we're forecasting, over this next week, if you don't have a lot of time, if you're happy with rates and you're squeamish, talk to your professional about locking that in or what the benefits to be would be floating. And then if you do decide to float, we could see rates improve next week. But again, we could also see them go the other direction. You have to be prepared for that. But next week is going to be a big time movement either way on Tuesday and again on Wednesday. So sorry, that was me talking for a lot. Chasity, please jump in at this point and add or anything to that.
Okay, concerning the interest rates, I always tell everyone that if you like the rate to lock it in, that I gamble with my money. I don't gamble with yours. So it's be up to you on how you want to approach that. We usually lock loans in increments of 15 days. That doesn't mean we can't lock them on a 12-day, an 8-day option. But, we usually 15, 30, 45, 60, that kind of thing. Now, one major point that I have seen a lot of lately is everyone is stuck on the interest rate that they received before, and they're not really utilizing mortgage loans the way that we are now learning to re-examine how we use long-term collateral financing. So yes, you had a great interest rate before, but now you have a bunch of debt that you need to take care of and you have a lot of equity in your property. Guess what? You can do a cash out refinance. Yes, it's going to be a higher interest rate, but it's a lower rate than what you're paying on all of those monthly debts. And then you can turn around and refinance it again for a lower rate later on. So don't get hung up and put yourself in a financial disaster because you got such a great rate before and you don't want to go talk to your loan officer again. We encourage you to. That's why you have a home. That's why you pay principal every month. So we can't help that interest rates were at a record low before, but we can help that how we're going to use your equity from now on because equity is at an all-time high.
Yeah, and it'll stay that way. So we've talked about that lots of times, and we'll talk about it again maybe next week. So quick, one of the questions that came in from the Facebook group, what is the rate range right now? So it depends on your loan program. It depends on your credit score. It depends on, it can depend on for non-VA loans, how much money you're putting down. But generally, and again, this is not an offer to lend. There's no APR. This is just a generality. For VA loans, they could be as low as somewhere in the high fives, maybe 5.875, generally into maybe 6.25. All right. So that's generally for your VA loans. That's going to be a decent range that you could work with for what we call conventional financing for somebody that hasn't served or, doesn't qualify for a VA loan. We have what we call conventional conforming loans through what you may have heard of as Fannie Mae and Freddie Mac. Those are generally right now going to be in the mid sixes, maybe as good as in the 6.25 range, 6.375, maybe as high as 6.75, depending on your credit score and what you have to put down. So they can range a little bit wider, and I know that is a wide range, but that should be what that is what you should be seeing generally. If you're seeing rates that are advertised much lower than those, run, don't walk. Too good to be true. If it sounds too good to be true, it probably is. So, Chasity, you were mentioning that before. If you want to talk about that for a quick moment.
I just think, like it's just really important to make sure that you're working with a trusted professional more than a shiny object or more than what your inclination is because the company appears to be affiliated with a government entity when they are not. VA does not lend. They set guidelines. They do not help any other lending company over another. I encourage everyone, we're here and vetted for a reason. This isn't a pitch for me for business. We are trusted professionals. We will give you our advice. Last week alone, while I was on vetted duty, I looked at someone's loan estimate, told them how out of line it was with what the market was, got them connected with someone in their state that was, and now they're closing for exactly what they thought that they were, what they were originally promised. So, it's just working with someone that's trusted. That's the important thing, because there are so many ways that we can alter and tweak little numbers here and there to make us appear to be better when really, in fact, we're not. Or not me, I'm better, yes. But another loan originator is not, but they've tweaked that loan estimate in such a way that makes them appear that they are. And everyone can check somebody's employment history, see if they actually have the education to back it up. We have something called the NMLS Consumer Access that you can go online. You can actually see how long your loan originator has been a loan originator, how long that they've worked for the company they work for. Get a feel for that person. Just check their credentials. That's what they're for.
There you go. For anybody that wants to check that, it's nmlsconsumeraccess.org, and you could put in the person's name and see who they are, what they do. A lot of loan originators will do that.
Detective work there if you want to, if you care to actually check out the person who's going to get your social security number.
Yeah. So, well, thank you, everybody. Let's see. Great information. Raul says, great information, Chasity. Thank you, Raul. We appreciate you. And remember, everybody, you guys can join us next week. Where's my little banner for that one? It's up here somewhere. There it is. All right. So remember, we do this 11 a.m. Central, 12 p.m. Eastern. However that works all across the nation. You guys do the math. I'm East Coast, so 12 p.m. East Coast every week, every Wednesday. If you guys have any questions, though, of course, please go ahead and put them in the group. We'll be more than happy to answer them for you. And otherwise, we'll see you next week. Chasity, thanks again for joining us.
Thank you guys for having me. I enjoyed it.
All right. Bye-bye.
Bye.